JPMorgan, one of the largest banks in the United States, just said that Bitcoin could be undervalued relative to gold. Their analysts see a path to $165,000, about 40% above today's levels, by comparing Bitcoin's volatility adjusted demand with gold's. Here's the math. So Bitcoin's market cap is around $2.3 trillion, and gold's private sector investment through ETFs, bars, and coins is roughly $6 trillion. On a volatility adjusted basis, Bitcoin requires 1.85 times more risk capital than gold. And so to equalize that, Bitcoin's market cap would need to rise by about 42%, which implies a price of $165,000 per coin. And this seems to not be just theory. Gold has surged throughout the summer, and Bitcoin's volatility relative to gold is now at its lowest level on record, below 2, as you can see right here. That means Bitcoin is a relatively cheaper way to get exposure to the debasement trade right now. Rotating from gold into Bitcoin seems to be a logical move. And the data backs it up. Retail investors have led the charge. Flows into spot Bitcoin ETFs outpaced gold earlier in 2025. Gold caught up in August as geopolitical tensions and fiscal fears rose. But the point remains. Capital is rotating into both as hedges against currency debasement. Even JPMorgan is calling this out explicitly. The key difference is that gold is at $26 trillion in total value, and Bitcoin is only at $2.3 trillion. That upside gap is enormous. Historical correlations also suggest that Bitcoin is next to take the spotlight. If we'll take a look at this chart right here, this is the rolling 30-day correlation between Bitcoin and gold, with Bitcoin lagged by 100 days. This has been positive all year, which is the longest stretch of positive correlation in history. The last time this flipped into persistent positive territory was in January, the same time the dollar began its secular decline into weakness, further highlighting that both of these assets are part of the same trade. And the reason Bitcoin lags behind is because it is smaller and its other cross-asset correlations tend to dominate. So while central banks may not be bidding up Bitcoin the way that they do gold, the reflexivity is undeniable. Investors are beginning to see Bitcoin as part of the same debasement trade. With JPMorgan itself now saying Bitcoin should trade alongside gold, the path to $165,000 is more than plausible. It seems mechanical. The debasement trade is dominating, and it seems it's Bitcoin's time to shine. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and follow, and of course reshare so more people can see this, and check out Horizon. Horizon lets you buy Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. To learn more and see if you qualify, visit joinhorizon.com or scan the QR code right there. That's all for today's video. Thanks again for watching. I'll talk to you soon.